Welcome back, everyone, to another Toolbox Tuesday. It's now 2 minutes past, so we'll just go ahead and get started and let people join when they join. Today, we are going to be going over merchant lending as a service by Rapid Finance, and we have Jim Fink, who is the Director of Strategic Partnerships, presenting for us. So, Jim, whenever you are ready.
Hey, I appreciate it. Thanks for having me today. Welcome, everyone. I'm glad you can attend. What we hope to get out of this for you is understanding a little bit about the products, what the climate of the market is, small business merchants, how to offer this and what the process is. And hopefully we may have more of these down the road, but I want to thank everybody at Pay Compass for allowing me to speak to you on this Toolbox Tuesday. I'm going to start a little bit with my background. So I've been in the merchant services realm for 25 plus years, and that includes being an agent on the street selling merchant services, running sales and marketing for a company on the East Coast called Evo Payments International for 10 years. I've been in the leasing side of the business and now kind of come full circle into what I'll call the working capital side. So back into the funding side to merchants. So that gives you a little bit about me. I certainly have sat in your shoes. I understand what's important to you, and also the unique relationship you have with your merchants. So let me start with a little bit about Rapid Finance and kind of who we are. We've been around since 2005. We're a direct lender, and we call a platform lender. So we have on-balance sheet financing, off-balance sheet financing, but primarily the small to medium-sized businesses, which really, if you think about your own portfolio, it's the type of merchants that we all have sold to and continue to sell to. We're an East Coast-based company. We do have a sales operation in Detroit. We funded over $3 billion to 40,000 plus merchants since 2005. And we also, when we work with clients, we're multidimensional. So there's different types of channels that an ISO acquirer may have that we can gear programs towards them. And if you look at these logos on the right side of this slide, in 2013 we were bought by this company. He has, throughout the course of his career, is acquired or started. We may know of or have heard of Cleveland Cavaliers. Obviously, Quicken Loans. You can't turn the TV on or go to a gas station without seeing a Rocket Mortgage commercial. Fathead, Rob Report, gas station TV. So again, the reason I put this out there is to show anyone that's participating here that while Rapid Finance, we are a direct lender, providing capital to merchants through referral partners like yourself. We are part of a much larger family of companies. Again, there's about 150 of them that's part of the family, and these are some retail brands that I'd like to share with folks that usually resonates with them. The one thing I didn't say as we continue towards the end of this, which I think is the normal protocol, we will have a kind of a Q&A session. So any questions that you have about the product, the slides or whatnot, or anything in general, please save them, and then we can talk about it towards the end of this presentation. So the reason we're talking today is basically fundamental. So during recent surveys, the #1 business challenge that small businesses are facing is an access point that's easy, fast, reliable, where I can get capital. And in this transitioning economy, this challenge has increased exponentially during these uncertain times. What we are seeing, from the lending side, all the free government money's gone. The PPP programs, the EIDL programs, those funds and programs are over. And what is happening now, these companies are still clamoring to basically get capital to kind of get through what they've been through the pandemic. And banks, while they say on one side that they're lending, they really are leaving the SMB folks out of the picture. So it's still very difficult for these folks to get access to capital, and especially in the time that they need it. And what we're going to be able to cover and bring to you through the pay compass relationship is a way that you now can basically work with your merchants as well as acquire new merchants by getting them quick access to capital relatively painlessly. This slide basically just covers kind of what the SMB market looks like today. It is a massive opportunity. There's 31 million SMBs in the US. And if you look at this pyramid, it basically breaks it down to 1 million between 20 and 500, 6 million less than 20 employees, which is the typical, SMB merchant that, ISOs will typically go after and provide processing for. And then you have the 24 million that are non-employee businesses. These are single proprietors, contractors or whatnot. And one of the unique things that we've seen, again, these are through surveys by the SBA and whatnot, is that, back to the previous slide, is that most merchants, 60% of merchants feel that the current offerings out there are inadequate for them. It's kind of a one-size-fits-all approach, and that doesn't work for them. And they believe that they need a different partner. And we'll share with you the different products, but you have the ability to offer different products. So it's no longer a one-size-fits-all approach. It's really, what product makes the most sense for you, Mr. Merchant, because you are very unique, and we've got different products and solutions that's going to fit your specific need. Playing off the original slide, again, the top business challenge during the recovery period is cash flow and credit availability. And this is exactly what we're presenting to you today, that you have the ability to very easily offer, your merchants as well as potential merchants, is that, on top of, the merchant services that you're providing, which is purely your core business and the most important thing, you have these other products, and in this specific instance, lending, where you can deliver, capital to them. And, everything that we read and surveys that we see, that is a major issue, is cash flow. How am I going to manage my cash flow? I've got a shortfall with payroll. I want to expand. There's all types of different uses for it, but they just don't have it available to them in the time that they typically need. So you now have the ability to be able to offer them a lending solution that really helps them grow their business. And that's exactly what you want to do with any of your relationships. This slide goes over typical customer challenges. So when we look at in our own surveys, what the typical merchant uses our money for when we fund them, it is to cover unexpected opportunity that we talked about. I may have an opportunity to buy inventory at a deep discount, but I don't have the cash to do it. I can't go to a bank because it's going to take me probably 4 weeks, even if I got approved, to get the funds for it. So now I need money very quickly. Cash flow timing. We talked about these great, I'm a restaurant owner, I make a great pizza, but I don't really manage my cash flow, I manage my business operations. So again, I need capital real quickly to be able to manage that cash flow and do the things that I need to help grow the business. Again, expansion or growth, inventory buildup. One of the things going into Q4, that is just like in processing, in the lending side, that is our biggest quarter. And because everyone's gearing up for the holidays. Just like the processing spikes in Q4, our lending does too. So right now you are positioned nicely, once we get this rolled out to you, to be able to go in, finish up Q3 and get into Q4 when most people are borrowing and looking for capital. So now you have this tool, this arrow in your quiver, to be able to offer it to your existing clients. Let's talk about the WIFM. What's in it for me? What's in it for my customer? What capital provides, and this has been proven in my own experience. If I was in front of you, I would ask you to raise your hands of how many people actually have lost a merchant, didn't realize they lost him until they saw the residual report and found out that the merchant left because they needed money and somebody called them up or another processor offered it to them, and the money trumped the process. I know it's happened to me personally, and I'm sure there's folks in this call, if they go back and say, yeah, you know what, I do lose a merchant here and there because they offered them capital, and either I didn't have it or I didn't let my merchant know I had it. So one of the most important things for your benefit is retain more merchants. This also, we talk about, this is a tool to acquire new merchants. Merchants, when you start talking about capital and you're, prospecting or whatnot, and they know that can possibly get capital by going with you, it's a huge lift there. The most important thing, we're all in sales, it's new revenue. This is new revenue stream for you. And we're not talking basis points. We're not talking transaction fees. We're not talking monthly fees that you get participation in. We're talking about percentage points. So this can be substantial revenue for you over top your monthly residuals. Again, securing the residual income. Once you lock them down with financing, MCAs or loans or whatnot, you basically have locked that merchant up. Getting more products into them helps build longer lasting relationships. And what that does is secure your residual for the long term. And one of the most exciting things here, which PayCompass is doing, which when you see it, you'll really realize it. 75% of merchants that borrow from us renew for multiple loans or MCAs. Not every ISO does this, but PayCompass, Justin has agreed to do this. That renewal commission is going to be offered to you. So you're basically building an annuity here. These merchants renew when they're 50% paid down, they usually renew for more money. That is literally a commissionable event for PayCompass and you, the agent that originated the deal. I call it mailbox money because you end up making money and don't even realize your merchant has renewed. So again, take a look at this. All these things, once you get one loan into a client, all these benefits, are a huge opportunity to help increase your income, stabilize your residual income, and really act as an advisor to your clients. And, we talked about it a little bit, kind of the benefits of the merchant. It's pretty straightforward. You're giving them access to capital. This is a real value that they need. Most of them can't go to their banks because they don't qualify because the credit guidelines are too strict. If they can go to their banks, they usually can't get the money as fast as they need it. In that previous slide, our typical merchant says when they have an opportunity, they need to get capital within 7 days. We'll get it to them within a few days. They now have the ability to pursue opportunities, help grow their business. And like I said on the other side of this slide, future access to capital is very easy. We have clients in our portfolio that have renewed 60 times. So you think about that, merchants borrowing $50, $75, $100,000, and they continue to renew that 60 times, 10 times. That's all commissionable. It's huge, and this can be, like I said, a huge new revenue stream for you if you help make your merchants aware that they can get this through you and not wait for somebody to call them from Brooklyn in some call center. Let's talk a little bit about our products. I don't need you to memorize this slide, but I want you to understand that we have, we have multiple products that are available, okay? We have a small business term loan that's available. We have the business or merchant cash advance that, if you're familiar with this business, you've heard of. That's based on credit card receivables. And then we rolled out in Q4 last year. This has been a huge win for us right now. It's the line of credit. Again, I'm not going to go over each of these. You'll all have access to this specific slide in a document, so we don't want to waste your time by going through it. But this tells you what the basic requirements are for each of the products, and then what we'll be looking for to see who qualifies for what when a referral is sent to us. Okay, but the small business term loan, we'll talk in the 30,000-foot level, is a traditional term loan. We go from anywhere from 4 months to 18 months. Again, this is not long-term asset-backed and based financing. So anywhere from 4 to 18 months is the typical loan term. And that's based on their total cash flow, the total revenue they generate. And that's credit cards, cash, checks, any type of revenue they generate in a month. The business or merchant cash advance, the terms are a little different. It goes out to 12 months max. Minimum time in business is a year. And in that product, we're looking at specifically their credit card receivables. So we're looking at over a 3-month, snapshot. What's the average credit cards, Visa, MasterCard, Amex card that they take in a month? And so when we make offers to clients, it's all based on their revenue. So this is revenue-based financing. So we're looking at what their revenue is, how much cash they generate, And at that point, we back that into how much we think we can fund them to help them grow the business. And then the last one is a line of credit, which is a revolving line of credit, which most of us are probably familiar with in some capacity. And that is a 6-month, 9-month, or 12-month line that the max line right now is $55,000. And then the client, the merchant, basically can draw on that line like they could if they went to their bank, if it was available, and basically draw how much funds that they may need for, whatever they need the use of the funds for, until they hit that 55,000 cap. And then that's continued to pay back ongoing. So again, all three of these products are renewable. And that's when merchants continue to take out more funds. They pay it down, they take out more, and it becomes, like I said, for 75% of the merchants, they continue to do this ongoing. And the reason being is the access and the ease to get the capital. It just makes their life easy, not having to worry about it. They basically can go on their portal, they'll talk to one of our business advisors, and the process starts. And I would say most of the time that's same day funding. So when somebody renews with us, there's some basic information that we need, but typically by the end of the day, they'll have the funds wired into their account. So this is an important slide. It talks about our pre-qual requirements. So this is what you're going to want to know when you're talking to a merchant and someone says, yeah, I'm interested. Gosh, how much do I qualify for? What do we need to do? What we need from you folks in the field is there's a one-page application that Pay Compass already has. We need that completed, dated, and signed. And all I need is the last 3 months of processing statements, which if it's an existing merchant, you already have, and the last 3 months of bank statements, okay? Once we get those, that's the information we need to basically qualify or unqualify your client and then generate offers. And we'll go through how that process works. So it's basically very limited information that we need to be able to assess if they qualify for any of our products, and again, what the offers would look like. So how much they would qualify for. The right side of this slide, which I'm sure everyone's looking at right now, is our prohibited industries. So again, I don't know what your prohibited industry list looks like. I'm sure it's probably very similar. There will be some things in here you'll scratch your head and be like, well, why wouldn't you offer to a law firm? They seem pretty stable. Unfortunately, our experience in law firms is exactly what they are. They find their ways to circumvent and get out of contracts and not pay. So we've kind of stayed away from them. Some other ones that we'll kind of hit upon, nonprofit churches, religious organizations. Again, you think that would be a very easy one to finance. You provide processing services for them, it would make sense. We stay away from them primarily for one reason. If we have a church or some religious organization that doesn't pay us, we obviously need to get our money back. And just the optics of a finance company, trying to collect from a church doesn't look good. So in our experience, we decided to stay away from that. But those are just a couple that you may say, well, gosh, we would provide processing services. Why wouldn't you lend to them? And there's some reasons there. And if anyone has any specific questions about any of these, we can certainly talk about them offline, or send me an email, or we can talk about them in the Q&A as well. Let's talk about the Pay Compass submission process. It's very, very easy. So the last slide, we need the statement, the application, 3 months of bank, 3 months of processing statements. You're going to basically email that to Chris, the director of sales. His team's going to package it up. They're going to send it to us. And then we basically, on your behalf and Pay Compass' behalf, we close the deal. What's really important is, make sure that the applications are legible. All right. So the applications that we have sent, it's a PDF document that's a form feed, so you can type into it, which makes it very easy. But some folks like to print it out and write. Okay. So legibility is huge. Make sure it's signed within the last 30 days and all the statements are separated. It's pretty basic stuff, but it really helps in expediting us being able to enter data and analyze it and generate offers for your merchants. Once we receive the submission, here's kind of the deal flow that we go through. So we're going to receive the application and the processing statements. At that point, it's going to be entered. We're going to identify that, okay, we can generate offers. We're going to generate the offers, present them to your merchant. Once they agree on whatever product that they want and term that they want, we will then email them a loan agreement through DocuSign. They'll electronically sign it. They send that back into us. It goes to a cursory underwrite. That happens within a few hours. Once we underwrite and the merchant's approved, it gets put into our funding queue, and then we can fund as fast as one day, and that's via wire. So usually between 1 to 2 days, loans are funded, and in 2 to 4 days, MCAs are funded. And the only reason the MCA is a little longer is because we put a hold back to get us paid back. And we can talk about kind of the remittance in a little bit as well. But this is the deal process. Once you submit it into your folks at PayCompass, they're going to send it to us, and this is what it's going to go through. While there's multiple steps, we're really talking about a couple, 2, 3, 4 days at max. And 4 is a stretch. It's usually if we're missing something or we have some questions about something that was submitted to us. Sales agent tips. So this is something you guys definitely and ladies want to make sure you take a look at. The most important thing is when you take away from this conversation, and at the minimum, let your merchants know that you have this opportunity and you can provide them capital. There's no reason that you shouldn't be part of the revenue cycle when they borrow funds to help grow their business, as opposed to somebody that they don't know that literally is just picking up directories and calling merchants and offering them capital. So what I always tell any reps during any training, or if I'm talking to them, target your low-hanging opportunities first. This is your existing merchants, obviously referrals. And when I say low-hanging, I would look at your portfolio and say, okay, here's my portfolio. I'm going to look at the ones that make the most margin, the most revenue off of. At minimum, you want to let them know, hey, you know what? I've got capital. We got a capital program now. If you need capital, please give me a call and we can talk about all the different products and programs. And I say that because nobody likes to lose their largest revenue producing merchants. And you'd hate to, like I said before, and like I said, somebody be in this call, that you find out you lost a merchant because they needed capital, didn't think to go to you and borrowed from somebody else, and they convinced them they had to switch processors. You want to avoid that as much as possible. So I'd say awareness is huge. Let everyone that you work with know you have the product, but at minimum target your low-hanging fruit and those large revenue producers for you. We talked about product awareness. That's huge. When I talk to groups and like this, but more so in training face-to-face, I always tell them to flip the conversation. And what I mean by that is a lot of sales organizations, not necessarily this one, but I'll talk to people and they'll go into a merchant and they'll be like, oh, Mr. and Mrs. Merchant, you know what? Can I see your statements? Let me see if I can save you some money. And they'll do a statement analysis. And that's probably the 5th person, if not more, that has either called them or walked into their shop that week trying to offer them processing services. I've been there. I understand. There's a lot of people that do it. Merchants see it all the time, as you know. I always tell guys and ladies to flip the conversation. We know they need capital. All right. There's no question about it. So as opposed to talking about statements or whatnot, go into it, and this works. Hey, Mr. Mrs. Merchant, my name's Jim. By the way, if I could get you $30,000 by Friday, what would you use it for? And then you just listen. Because I guarantee you that merchant has not had probably anybody come in and offer them money. It's always they want something. Oh, give me your statements. I'll do an analysis. Oh, I want to try to sell you this. So I will assure you, you want to start dialogue, and that will start dialogue. If I can get you this 10,000, 20,000, what would you use it for? It's not an aggressive question. And they're thinking, gosh, you know what? I need a new pizza oven. I would do that or whatever. So at that point, the capital lead in starts the conversation. You break down any barriers or defense, like, oh, you know what? You're the 5th person that's come in on one of my statements. And then you back into the processing. It works. I've done it. Folks have done it. You need to try it, but it's a great icebreaker. And it's something that the merchant has not heard, I guarantee you, that week or probably ever. So flipping the conversation is huge. Asking the questions, if I could get you money, what would you do with it? Recent surveys that I mentioned before, these people need capital. Small businesses need capital. The low cost free money's gone, and don't assume that they don't need it. You know, asking the question, telling them you have the product is completely harmless, but it can pay huge dividends for you. I'll talk to agents. Oh yeah, you know, I deal with doctors' practices. Yeah, they got 700 series BMWs. They don't need the money. Healthcare, doctors is one of our largest segments. These guys have oodles and oodles of medical school loans. They need to get payroll paid and whatnot. So the one thing I say, don't assume that your clients don't need it, because you would be surprised how many do. And I think you'll be surprised how many people are already borrowing from working capital companies that you're not aware of, just because it's not a conversation that you're having with them. Again, from a sales tip standpoint, capital creates stickiness, and stickiness secures residuals. It's as fundamental as that. And I did mention it in a previous slide, but you know, the one thing you want to do is you don't want to be kind of a you know, a one product person. Oh yeah, you're my merchant services guy or gal. You want to be a business advisor. You want to go in and you have a full suite of products. You have merchant services, you have, you know, lending, you have payroll. You want to get as many hooks in your merchant as possible, because the more products and the more needs you fulfill, you will secure that long-term relationship. And in our business, that's exactly what we need. I don't need to be having merchants that trit every month and I got to continue to replace them. So again, be that go-to. You know, if they need certain things, they're going to call you because they know you have those products you can offer them. So again, all these slides you will have access to. So I hope you're not trying to take copious notes. I apologize if I didn't mention that earlier, but one of the things when you're talking to a merchant, what helps you out and saves you time, and also saves your merchant time, because no one wants to waste time. There's some basic minimum qualifications that you're going to want to kind of assess when you're talking to somebody or looking at statements. All right. One is, you know, minimum time in business is at least 1 year. So if you have a merchant that's been in business for 6 months, I don't have a product today that I can offer them. So what you don't want to do is, oh, I got this brand new merchant, been in 6 months, they're doing great. Oh, let me see if they need money, because that's going to be kind of a dead on arrival. So there's certain things that you can do from a kind of a business intelligence standpoint to kind of assess, hey, you know, is this something that's going to be a possibility, or do I know it's going to be, you know, unqualified immediately, such as, you know, you don't want to send me, you know, a church. Again, it's something I'm not going to be able to help you with. So again, at minimum, the prohibited list that you have, anything that's on that, you're not going to want to waste your time, which is very valuable, or your merchant's time, by even going down the lending path. But this matrix just gives you some ideas of what somebody would qualify for: minimum time in business, minimum monthly volume, and so on. So again, this is something you can carry with you when you're talking to clients. So it's a few different data points that will help you determine if you really should continue or engage in a lending conversation. So we're coming to the end here, and I'm not going to go over each of these, but these are some questions that are typically asked by groups. Not all of them, but there are some here that we kind of throw in the deck just so you can have to look at and review, you know, review on your own if you have any questions. But you know, Cameron, what I would like to do now is just, at this point, just open it up to anyone on the call that has any questions about anything that we talked about, any questions that, you know, you have that I didn't cover, or just questions about, you know, working capital lending that you maybe have had experiences with other companies.
You guys are more than welcome to unmute yourselves or chat if you have any questions.
Hey, Jim, I got a couple of questions for you. My name is Justin.
Yes. Hey, Justin.
So what about merchants' background, like on their personal credit, as far as what about if somebody has bankruptcies or, you know, liens or stuff like that? Is those are kind of, you know, dead on arrival as well, or can you guys work around stuff like that?
Yeah, that's a great question. So as long as it's not an open bankruptcy, we'll take a look at it. So that's the bankruptcy question. We do look at FICO. We go down as low as a 500 FICO score for our merchant cash advance product, and a 550 for our lines of credit and loans. Now, you're not going to know that, and in my experience, whenever you ask a merchant what their FICO is, it's always an 800. And you can find out it's not. So yeah, I don't expect any of you to ask that, but those are just kind of Mendoza lines for us. If it's below those are kind of, kickouts. We do accept, we when we look at deals, we know people have liens, personal liens, business liens, and whatnot. So there is a criteria of what our threshold of liens are, and it's about $150,000 worth of business liens and judgments. Again, you're not pulling that information, so you're not going to know it. But it's a great question. You've obviously had some experience in the past, but those are things we look at. So, we may, when we make an offer, we may come back and find out that they have these business liens that popped up that exceeded, what we currently have available. But if they have payment plans in place, there's certain things that we can work with them and still provide financing.
Okay, awesome. And I love what you said about medical. Any other like SIC codes or whatever on our side that you think is, I know the low hanging fruit of restaurants, but I'm saying that was actually kind of cool information. I guess why wouldn't
Yeah, you know what
series?
I can do?
Yeah,
I probably should have included that. I feel bad. So yeah, I've got a list of common SIC codes that we know just based on our own portfolio that borrow from us. And I'll put that together and get that over to the team. But yeah, so healthcare is a huge market for us. Transportation is a big market, growing market. Your typical restaurants and retail, that's always been out there. So we've got construction. Again, I'm not sure all the markets that you guys call on. Construction is the big one for us. Not that they take a lot of credit cards, but they do borrow from us. So we've got some other channels that aren't in the merchant services world, but they resell our financing. So in the healthcare, we're talking about dentists, ophthalmologists, podiatrists, your primary care physicians. All those kind of bundle up in the whole healthcare. Veterinarians are huge. The other thing that is also big is contractors. So again, these are just a few. Then you have your typical, a very big one for us is auto repair, and like auto mechanics and whatnot. So if anyone on the call focuses on that, that's a big one for us. One thing we don't do is new car dealerships. While that's a big client on the processing side, the problem we have is most of their inventory is floor planned, so they don't own it. So it's tough for us to determine the revenue because all those cash and car sales really isn't true revenue to them. So, but yeah, I do have a list that I'll socialize with your team that they can share with everyone.
Okay, awesome. Thanks. I guess if nobody else want to pop in, I just got one more, just kind of curiosity one, Jim. I think I tried to catch you in Chicago last week, but I wanted to ask you this one. So I got a 14 location QSR chain I'm working with, and this guy's working with Square, and of course Square makes the world easier, right? According to them. And anyways, at the push of a button, he says he can get $1 million from Square at 10%. I understand, I'm not asking you the APR and all that sort of stuff, because obviously it's contingent on volume and, like you just said, background, blah, 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 blah. But is there any sort of legitimacy in that, or is that just kind of an owner kind of fibbing the truth a little bit?
So what Square has done, there is some truth to that. And so what Square has done, and it's no different than Stripe, Shopify, Intuit. There's this, everybody here has embedded payments. So yeah, so what they have done, they have basically included financing into their dashboard. So now a merchant can basically, as they're looking at their statements or looking at whatever's happening within them, can literally say, oh, you qualify for X amount of dollars. Click here and start the process. The 10% seems a little light. I don't know if that's accurate, but the ease of getting the money is accurate. And Square is very difficult to deal with. They will not let anybody pay off loans. One of the things that I did mention, this is for everyone. So you may have a merchant that says, oh, you know what, I already have a loan with ABC company. That's not a problem, because there's a good chance that my cost of funds may be less than what they're currently paying. So we we do this daily, regularly. We will we pay off whoever they owe money to, and then fund them additional funds that they qualified for. So you don't have to walk away if somebody says, oh, I brought it up and they said they're already borrowing. Not a problem. That's something we can help them out with. And you may be a hero by providing them financing at a lower cost than what they're currently paying. But back to the Square thing, I think the 10% is light. But you know, what he's saying, with the click of the button, you certainly can get funds. I don't know if it's $1 million. I haven't heard Square go up that high, but the functionality of what he's saying is correct.
Can I?
Okay, awesome. Thank you.
You just mentioned something about paying off loans.
Yes.
Do they have to be a certain way down the line? It used to be with you guys, they had to be like, they had to pay at least 50% of the loan back.
So if we're talking about paying off a loan that they have with another company.
Yes.
Okay. So the way it works is, so there is a rule there. That's a great question. So I will pay up to 65%. So let's say they qualify for $100,000. Just use some easy math. So they apply, they qualify for $100,000, but they owe $65,000 to ABC company. I will pay off up to 65% of my money. I'll use that to pay off a loan. So in this case, you qualify for 100, you owe 65. I'll pay 65,000 off to ABC company, and then you will net 35,000 of that. So it's not necessarily how much that they paid back on their existing line or their existing loan. It's how much they qualify for me and how much they currently owe. So again, up to 65% of what you qualify for me, I can use those funds, or you can use those funds to pay off, you know, a loan you already have in place. Does that make sense?
Yep.
Okay, good. Great question. Anyone else have any questions? I hope it was useful. I hate kind of talking into a screen here, but anyway, I think this is a great opportunity. Like I said, I've been in your shoes. This product, and not because I'm sitting on this side of the fence with this product, being in the merchant services world, selling accounts and working at Evo, there's very few value-added solutions that were ever brought across my desk that truly were real needle movers in revenue for the agent. Again, we're not basis points. We're not some fees or monthly fees and whatnot. These are percentage points, and these are real hard dollars. And you get a deal that's funded up to $600,000. That's substantial. That's substantial income, and these things continue to renew. So, again, if you walk away from nothing, just make your merchants aware that you do have it, and it's a pretty easy process to see what they qualify for and get approved.
Hey, Rob, this deck going to be sent out to everybody?
Yes, it will be.
Okay.
Anyone else have any questions regarding the product, experiences they've had, expectations? I will get over the I'll say common SIC codes that businesses that typically borrow from us. So you'll have that, so you can look and see if anyone focuses on specific verticals, it may be one that you focus on. But I will say, merchant funding today, if anyone's on this call has been around, so when this product kind of first came about back in like the early 2000s, where it was strictly financing of last resort and it was for restaurants. It has gone completely 180 degrees, where we're financing manufacturing, wholesale, healthcare. The cost of funds have come down, the access to funds has gone up, the types of products that are available has expanded. So this really has become as much mainstream as bank financing. There's literally, I would say, hundreds of millions of dollars, if not more, are funded in this type of capacity per month to businesses throughout the U.S. So people are borrowing.
Is there any more questions for Jim? All righty. Well, thanks everyone for joining. Jim, thanks so much for presenting, and we'll see everybody next week.
Appreciate it. Thanks, everyone.
Thanks.
Bye now.